Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 28th of October 2023. We're publishing our gold and silver weekly update for the week ending the 27th of October. Well, a week ago we said expect 2,000 gold by this week. And yes, it took until Friday to achieve it, but it has happened. What was the reason? Well, let's take a look. Now first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. Place the link in the description box and comment section below for those who have not yet joined the channel. Now going back to what happened last week and what we expect to happen this coming week, gold actually rose $25 last week, moving from $1,981 to $2,006. Yes, breaking that $2,000 barrier. Having hit a high of 2009 and a low of 1955, a rise of 1.3%. In sterling terms, it finished the week up £25 at £1,656, and in euros it's up 29 euros at 1,900 euros. Silver did not perform quite so well. It actually fell 24 cents, falling from $23.37 to $23.12, having been as high as $23.56 and as low as $22.53. A fall of 1%. In sterling terms, it's down 15 pence at £19.10, and in euros, it's down 0.18 euros at 21.91 euros. Obviously, the gold to silver ratio went up, which it did by 2 points from 84.8 to 1 to 86.8 to 1. The difference between gold's high and low was $54, and the difference between silver's high and low was $1.03. This is what we said last week concerning our forecast for this week, which we've just had. We expect gold to trade between 1930 and 2030, and we expect silver to trade between 22.50 and 24.50. Gold traded well within our normal trading range, and the previous week we actually produced a video entitled Gold Forecast, Will It Hit $2,000 this week? If you haven't seen it, we've put a link below, and admittedly it took one more week than envisaged to hit that target. We had thought there was a distinct possibility, and it did come very close to it hitting that level last week. We also stated that we expected silver to trade between 22.50 and 24.50, which it did perfectly. Now looking at other financials, Bitcoin stands at $34,105. That's up $4,300. We have the Bitcoin halving occurring pretty soon, and so Bitcoin has benefited significantly from that. Equities were down. Dow Jones down 710 points at 32,417. The S&P 500 down 107 at 4,117. And the Nasdaq down 340 points at 12,643. And the UK FTSE is down 111 at 7,291. Not good for equity markets. There may still be pain ahead. Oils were lower. Brent crude down $1.68 at $90.48. And WTI crude down $2.54 at $85.54 a barrel. The dollar index stands up 0.40 points on the week at 106 points, 0.56. That's 106.56. Now, in terms of economic data, we said to watch out for Friday's PCE index, and yes, it did move the market. But before that, we saw flash PMIs coming in slightly above expectations. New home sales for September being nearly 80,000 higher than anticipated, and Q3 GDP coming in at 4.9% as opposed to forecasts of 4.7%. So the economy looking pretty strong, at least as far as the economic data is concerned. On Friday, we then had personal income for September coming in at 0.3% against expectations of 0.4%, but personal spending was up at 0.7% against expectations of 0.5%. There is a conjecture at the moment that a lot of this personal spending is being placed on credit cards, which, at exceptionally high interest rates, does not all go well for the near-term future. Now, the PCE figures came in exactly as anticipated. The September PCE were at 0.4%, providing a year-on-year figure of 3.4%, and the core PCE, which is what the Fed and most economists look at, the core PCE for September coming in at 0.3%, providing a year-on-year figure of 3.7%. Now, before we all get too excited, we're still some 1.5 percentage points from the government target of 2%, and the year-over-year rate has only fallen by 0.1% compared with last month. But we suspect traders breathed a sigh of relief in view of the other strong economic data that had been announced earlier, potentially having a more devastating effect on the inflation rate. So PCE, or inflation figures, coming in more or less as expected, gave gold and its market some relief, and we saw what we believe to be that inevitable rise to $2,000. Now, interestingly, this weekend, a number of forecasters are predicting November to be a resurgent month for gold, with gold potentially reaching as high as $2,100, breaking all-time highs of $2,069, which, only being some $63 away from current levels, is certainly not impossible to achieve. If the geopolitical tensions between Israel and Palestine worsen, and they've been slightly quiet the last few days, or at least the reporting, and the prospect of no rise in interest rates continue, then we could easily see gold being a major beneficiary and reaching those levels. That said, we also have to acknowledge that should any form of peace be achieved between the two states, then the war premium reduces dramatically, and gold could easily fall back not only towards $1,900, but towards $1,800 territory. But for now, though, we do not see that happening. Silver met a lot of resistance at the 2350 level. In fact, it only spiked up to that level very, very briefly, and it is finding it difficult to hold above 2325. While silver benefits from geopolitical conflict as a precious metal, any effect on industrial demand could also have a negative impact, which is why silver has been lagging gold in terms of performance. Now, this coming week, we have important data being announced by the United States, and of course, the extremely or all-important decision on interest rates by the FOMC on Wednesday. We have to assume the FOMC will be aware of both the ADP employment report also being announced that day, and the US employment report on non-farm payrolls to be announced on Friday. If not, there could be some contradictory measures. Most economists do not see the Fed raising rates on the 1st of November, though. Many have cited that credit cards are now charging the highest interest rates on record, and many home buyers have been priced out of the real estate market due to loan costs. So any increase in interest rates will exacerbate this situation. We tend to agree with them about the decision for November. We would have liked to have seen rates another 25 basis points higher 2 months ago, but we are where we are. And the PCE figures were just about good enough to enable the Fed to delay any rate rise yet again. So this could therefore push precious metal prices higher, though there does really need to be a slight period of consolidation if recent rises are to be banked in or baked in, as it were. So where is our prediction lying for this coming week? Well, we expect gold to trade between $1,960 and $2,050, with $1,950, so we're not going down much more on our outlier range, to $2,070 as outliers. Silver we expect to trade between $22.25 and $24.50, with $22 to $25 as outliers. What do you think? Where do you think those figures are going to end up, higher or lower this week? Please share your thoughts. Meanwhile, thank you so much for listening. If you haven't done so, we'd appreciate a thumbs up, a subscribe, and you pressing that bell sign so you're notified of our videos as and when they're published. And all that remains now is for us to firstly advise you there will be a few more videos coming out this week. We're not sure what day, so please pay close attention. Probably on Thursday, might be another one tomorrow, but certainly on Thursday because of the Fed's decision on Wednesday. And it remains for us to wish you a safe, enjoyable weekend and a prosperous week ahead.